Relationship trading. That's what life's all about. I manage relationships every day, but managing relationships in the market's a real key to being able to hone in on those sectors that are moving or why this currency pair could be grooving back and forth, up or down. And those relationships are very evident as we start to the new trading week. Welcome to the MTI Minute. This is Kevin Dixon, Senior Trading Analyst at Market Traders Institute. Relationships, as you will. Relationships define us as human beings, but they also define us as a trader. If you're trading Canadian dollar and you're watching crude oil, you'll notice there's a relationship. Generally, when crude is down, the Canadian dollar is growing weak. Generally, when crude is up, you have strength for the Canadian dollar. Just like in the metals complex. The metals complex drives so many sectors and industries in the stock market, but did you know that it also holds sway in what happens with the Australian dollar and the New Zealand dollar? As a matter of fact, all these things are relevant into the relationships of the market. Kind of makes me feel like your relationship counselor, humbly so. I'll tell you what, we can talk about relationships all day, literally, but let's get into those charts. As always, they do the talking on the SPIDAs, and into the SPY we go. Now, today's a day where relationships, I'm going to expand on those a little bit more, but we have earnings starting to come out, big earnings reports, and influencing the price. This is the SPY. We've slipped into corrective territory once again, below the 10% level. Now, again, bear market, lower lows, lower highs on the swings, and we have that evident in front of us right now. But it's just whether not that we get to actually get that next wave lower there. Great English, Kev. But we did, in fact, break below a 20%. We're going to test this level, no doubt. We have some deep retracements there going on, but it's going to be earnings that get things kicking, not a deal from U.S.-China trade war. There is no advancement on that front. These are the diamonds. Today, the Dow Jones down 300-400 points. At the most part, we're rallying right now, not down as much, but carrying a big gap down, dropping back below that 200-day EMA and above that 50-period EMA. Now, I had a question from Tony a few weeks ago here, and Tony, I'm just going to answer your question right now about the moving averages I use. I like to use the 50-period exponential moving average partnered with a 200-period EMA. These are two of the most widely regarded technical indicators in any marketplace, be it futures, be it currencies, be it stocks, ETFs, whatever you can put an algorithm to. Those two indicators are widely regarded by the pros. So a pro knows where those price levels are. And so to answer your question, that's why you'll see me with moving averages on some of the charts that I'm going through. Great question, Tony. Thanks for asking. I'm going back into those charts with a verb. And we're going to move on to the Qs. This is what's weighing on the market. Now remember, the spiders are back in corrective mode. Diamonds are not. The Qs have ventured back below the 50-period EMA. Granted, we're getting pretty close there. These are flattening out, but the Qs are stuck right in the middle of correction territory. There's a lot at stake with Apple reporting earnings and some of our bigger names like Amazon coming around, but really what cast a pale shadow here is going to be the relationships we talk about. Semiconductors coinciding with a 6-month low on Bitcoin. Is that a coincidence? No. We'll discuss that when we come back around and talk some of these NASDAQ things of the day. And the Russell 2000 is not selling as much. So as far as the trends breaking down, the Russell is actually up on the day. And the Russell's not, it's down on the gap down. Everything's down on the gap down. But I've been watching the Russell to get a hint for direction. The Russell's not backing off. So that means that there are still some bulls out there because the small cap indexes are very aggressive. So let's go into our next chart here, and then we'll move right on into the conversation I was explaining about the destruction of the semiconductor complex. Now, this is crude oil. Crude oil has been down over 4% today. Have you noticed that the Canadian dollar was weakening up early across the basket? Relationship trading. I'll take you to the relationship there in just a moment when I swing into currencies. But right now, I've baited your appetite to talk a little bit about what's going on in the semiconductor complex today. Now, NVIDIA didn't necessarily report their earnings yet, but they did come out and say, whoopsie, we're going to have to lower our growth estimates across the board. We're going to have to lower our margin across the board. So they're actually saying, we're going to miss earnings if you can't read the writing on the wall. Well, don't worry about that. Wall Street did the reading for you, and this is down 15, 16, it was down over 20%, 30 points at one time on the day. Massive selling. But birds of a feather flock together. An influence, a relationship between NVIDIA and its peer group in the semiconductor complex has everything pretty much with a few exceptions in the semiconductor group selling. Let's get back into those charts, talk a little bit of AMD, Advanced Micro Donkenstein. Made a lot of coin on this on the way up. Haven't really done too much with this because I'm waiting for it to break above 23. But see, I will not get involved with it's in the noise level. Gaps right down today. Also kind of holding down near the lows. Looks like a tweezer top. In addition to that, we've got Micron. Micron, these fill their gaps. Micron was an excellent day trading strategy from the open. This gap down was down over 5 4 or 5% early on, but it's filled its gap. You see this green candlestick. I can go into more charts because you know I got charts for you all day long. But for the semblance of time, let's explain the relationship between this particular group of semiconductors, NVIDIA, Micron, and AMD, and all the things that are blockchain. So let's go find ourselves a little bit of crypto for you here. And really the only one I want to talk about is crypto-rific Bitcoin. Now look at this, folks. Bitcoin at 6-week lows. The volume is really dropping off here. The retail traders are not really participating too much in Bitcoin because really there's no point to it. It just continues to fall. Institutions seem to have lost a little bit of their luster there. And as I was talking about the semiconductors, this directly relates to the plight and the path of the cryptocurrencies throughout 2018, where we saw these highs in semiconductors coinciding with the 2017 highs. You know why? Wait for it. Wait for it. Blockchain. I knew that's what you were saying. You were saying blockchain, but I couldn't hear you. I hear you now. Blockchain was really the greatest thing to come out of cryptocurrency realm so far. The ability to speed up transactions. Companies like Square coming to report in the next few weeks, because Square actually has part of their holdings, their market capitalization in Bitcoin, in actually Bitcoin. It'll be interesting to see how that affected their impact earnings going forward. It's all about the speed of transactions on a global market. Remember, Han Solo needed those galactic credits. Jabba the Hutt had them. So let's get right back into those charts. And now we're going to go into taking our conversation from the crude oil element, the crude oil angle, if you will, to the Canadian dollar. Now again, Canadian dollar came kicking out of the gate. This is a 2-hour time frame. And so as we're heading into the morning from 8 o'clock, from 7 o'clock, we have this super wickety-wick candlestick, nice 33 pip move. From 9 to 10 and change, another 30 pips. And so if you go down to the 15-minute interval, as crude oil was dumping, the dollar rallied, made for a really good day trading day. The first thing I do in the morning is I look at my currency pairs to see whether we're trending to the direction of the larger time frames. Visually confirm the direction of your trend. If it's high to the left, it's low to the right, well, you're bearish. If it's low to the left, it's high to the right, then you're bullish. Use your Fibonacci's as well and understand what the overall direction is driving in the larger time frames. If we're not going towards the direction of that, drop down a few time frames, start looking for some of those day trades. So Monday to me was a day trading day just because we had Draghi talking and we also had Carney talking with a very light economic calendar. The FOMC meeting starts tomorrow with a rate announcement on Wednesday, so things could be a little bit slow. On Friday, we've got non-farm payroll, January in the books. Back into those charts as we once again pick up our conversation on Canadian dollar. This is EuroCAD. Now again, the only thing I want you to realize is that pennies off the railroad tracks. The opportunity active from 8 o'clock this morning was well over 70 pips. Now again, I don't want to swing trade in a choppy environment. I don't want to swing trade in something that is not certainly clearly trending. EuroCAD is struggling along the last few weeks. So with the wide trading ranges that are here, it's useless to get into a swing trade because you're just extending time. The Canadian dollar also is jumping against the pound, against the yen here, though we're having a nice rally back as the stock markets are rallying. People are moving out of yen. Remember, relationships. Yen serves as a safe haven. Dollar serves as a safe haven. So when the equities markets are feeling all good and getting randy to the rally, well, that's what you're seeing going back the other way. Is the yen weakening up? Is the dollar weakening up? But the opportunity in the morning here as well, over 40, 50 pips. I'll tell you what, if you go knocking out 20, 25 pips a trade, next thing you know, you've got a few out of the way and you're up over 75, 140, 150 pips. Like my man Mel again this morning. Mel just continued to assault the Canadian dollar. The pound wasn't trading so strong today. As a matter of fact, we'll wrap up our conversation on currencies here on the day with the pound. The pound, it's kind of consolidating. So all my bulls out there from last week, you're not doing anything today except twiddling your thumbs. If you're out there doing anything, you're just taking pennies off the railroad tracks. But this is a consolidation day. So if, in fact, the pound still has some bulls out there, then we'll break yesterday's high. I like to use 3 and 5 period interval highs as entering mechanisms to the direction of the trend. And if it's going to break that high, it's going to go up to the next level of resistance. That's what you know. But don't need to look at all the pounds today to know that the pound doesn't hold as much sway or influence into the markets today. The first few days are going to start quiet. Don't worry about that. Just keep your hammer going, because you know what? By the end of the week, you're going to have more volatility. You know what to shake a stick at. And that's a beautiful thing, because we are in it to win it. This is the MTI Minute. Kevin Dixon, thank you for tuning in once again. We will see you next time.